is all the hype about refinancing? Everyone is refinancing these days. You're probably wondering, how much do rates have to be dropped to be worth it? What if you already refinanced like a year ago? Should you be looking at it again? Hi everyone, I'm Megan Marsh, owner of Keystone Alliance Mortgage, a mortgage brokerage in Pennsylvania. And in today's video, we are going to walk through the most important things to know about refinancing. We will walk through the steps of refinancing. I'll cover the most important things to consider, what costs and money is required, and we will also go over some of the little known tips and tricks that will help you determine if refinancing is right for you. So when should you refinance? I say when you can save money, but it's not that simple. You do want to look at it. If you can spend $3,000 to save $20,000, it's worth it. And I will say I've personally refinanced my mortgage over the past 14 years, 3 different times. So let's start with the absolute basics here so you have a foundation, starting with what does refinancing mean? So refinancing means that you are taking your existing mortgage and you are replacing it or paying it off with a new mortgage. Now let's look at the different parts in a mortgage payment. So you've got, everyone has principal, the amount you borrow to buy your home. Then you have interest, P&I, principal and interest. And the interest is that what you're paying, and that's what changes based on the rate you get locked in at. Then you have your property taxes next, based on the house that you buy. Then there's insurance, homeowner's insurance, or it's called hazard insurance that you get from a different agency that you go shop for. And then last but not least is the mortgage insurance. And this is the amount that insures the bank, not you, but you're required to have it on most loans if you don't put 20% down. Now, some of you may have, if you're in a condo association fees, but usually those are separate. So there is a couple reasons why someone would want to refinance. And so I'm going to go through them with you here. So the first one is lowering your interest rate, the one that most people think of. Because when you refinance to a lower interest rate, you are then eliminating a lot of the costs that you're paying. There's also lowering the term of your mortgage. So say, for example, that you have a 30-year mortgage at 5%. If you go to refinance after a few years, you could possibly go to a 20-year loan on a lower rate and still have the same payment. Then the third reason why people look at it is to pull out equity. It's called a cash out refinance. And you might do that to take money out to renovate your home, pay for college, invest money somewhere. In essence, you're taking the interest now that you're saving in a lump sum that you'd be saving over the life of the loan if you didn't pull it out to use towards the things that you need in your life. And then the last reason that I see people refinance is to renovate their home. And a renovation refinance means there's not enough equity to pull the money out and take it as a check, so you have to roll those renovations in. Just make sure that whoever you're working for is not just throwing one option at you, that they're talking to you about your goals and what your long-term plan is, and then showing you a few different options no matter what. So those types of refinances that I talked about, the one that you just refinance your mortgage, that's called a rate and term. When you owe 100 on one loan and you take out a new loan for 100. A cash out refi is where you owe 100, but your new loan is for 120,000 because you pulled 20,000 out. There's also another kind of loan with government loans. And for FHA, it's called a streamline. And these are special types of loans where you don't have to have an appraisal. You don't have to provide income documents. You're pretty much just rolling into a new loan, but it does have to be structured correctly for you not to have to bring a lot of money to closing. USDA also has this streamline option or a full refi option, as well as VA. On VA loans, you can do a regular refi, a cash out, or they call their streamline an IRRRL. So all are ones you should consider depending on which loan type you have. Let's talk a little bit about closing costs and fees when it comes to refinancing your house. So typically your closing costs are going to be somewhere in the range of 2 to 4%. And that 2 to 4% is based on your loan amount. But really, Your costs are going to depend on your credit score, the lender that you're going with, and the type of loan that you're refinancing into. There are two misconceptions about closing costs when it comes to refinancing that I wanted to point out and help clarify. There's a lot of fluff out there, and a lot of people will say, no closing cost refinances. I want you to know there is no such thing. You are paying somewhere. There are costs that are associated. If there are not any closing costs rolled into your loan to increase your loan amount, then the rate has been increased to cover some of those costs. One big thing that people misunderstand is that when you refinance, you also need to set up a new escrow account. This is not a closing cost. So for example, let's say closing costs, which are appraisal, your underwriting fee, and the title company who's getting you title insurance, those are closing costs. Then if you're going to a new bank, you need to set up a new escrow account. That is a prepaid item or a tax escrow account. You would pay that if you refinanced or not. It's just when you refi, you have to set up a new account. And so money needs to be rolled in, but you'll get it back after closing. So some people choose to bring this money to closing knowing they're getting it back. And some people say, roll it in and I'll use that money that I get back later for something that I've been planning on doing. Ultimately, it's up to you. But we're going to go into this more in another video that I will reference later. So let's go into how does the refinance process work. The process is very similar to getting a mortgage when you purchased your home. You need to get pre-approved or have a mortgage professional review your mortgage information and your credit. This is where the mortgage advisor should give you a few options. And like I said, if anyone's only giving you one, look for a second opinion. If the numbers make sense and you want to go through with the refinance, that's when you need to make official mortgage application. And this is where you sign the loan paperwork and the appraisal, and they get the appraisal ordered, the title work gets ordered, everything gets started just like when you found your house and you applied for a mortgage. Now, we are seeing some appraisal waivers on refinances. And I do want to remind all of you that don't get a waiver. Yes, you do need another appraisal and you need new title work, even if you purchased or refinanced in the last 12 months. So after you go through applying, your loan officer will send your application and your personal information to an underwriter. And that underwriter is who looks at everything and they're going to issue that loan approval. And this is everyone's favorite part because the loan approval, that's where you will need to get any conditions back over to your loan officer and their team so that they can ask the bank to get the final steps done to where you're heading to closing and saving money. So after you get those conditions in, they issue what's called a closing disclosure or CD. It gets sent to you and then they issue the clear to close. This is when you will go and get the closing scheduled. You'll head to closing. But please note, refinances have one thing different than a purchase once you go to that closing table. When you purchased, you got the keys. Everything happened that day. On refinances, you have a 3-day rescission period or holding period. And this was established and created to give you a few days to think about it, make sure you want to go through the refinance. And if you want to change your mind, you can do that during those 3 days. I also want to mention a few things about refinances that seems to come up for a lot of people. These are the questions we get all the time. So a lot of people will ask, when should I refinance? And really, it comes down to whenever you can save money and it makes sense with your overall plan. And what I mean by that is, if you think you're going to sell your house or move in the next 2 or 3 years, I wouldn't recommend adding money on. But if you're going to stay in your house and you're saving enough that it's worth it, do it. Nobody has a crystal ball and knows if rates are going to go lower or higher. But if you lost the opportunity and you'd be really bummed, I would pull the trigger and do the refinance. And maybe you're still thinking, how will I know? You won't always know when it's time to refinance. Although I'm sure that there are many companies that are trying to tell you it's time to refinance. My best piece of advice is to work with a mortgage professional that you trust, just like you would a financial advisor. You typically wouldn't every time you're going to go invest some money, go and find somebody else. So instead of rate hopping and shopping, I know that you can save a lot more money by having a seasoned mortgage advisor in your corner, giving you all your options and looking at the big picture on if refinancing will save you overall. The other question is, does the rate need to drop by 1% for it to be worth it? And no, this is not necessarily the case for some of you. I'm going to give you 2 examples of clients that we worked with recently where they did not drop a whole percentage point and it wasn't necessary for them to be worth it to refinance. So the first client, they had an FHA loan and the FHA rate was 3.875. This client refinanced to a conventional loan at 3.875, but their payment dropped $100. Like, how does that happen? That's because FHA loans, mortgage insurance never drops off. But on a conventional loan, if you have the equity, it can be removed. So by doing the refinance, they dropped that $100, $1,200 a year. Client 2, this person had a conventional mortgage of around 3.5% on a $300,000 mortgage. They dropped their rate, not quite a whole percentage point. They dropped their rate from 3.5 down to 2.6 or 2.75, and it lowered their payment by about $150 a month, which is $1,800 in a year. I don't know about you, but saving close to $2,000 a year is worth it to me, even if that rate doesn't drop by that whole percentage point. It's really about weighing the benefits of paying closing costs and adding a little bit and how much it saves you monthly. On the bigger loan amounts, you're always going to have closing costs. So really it's about looking at your overall financial goals. And the other thing is, I just wanted to talk about how long it takes. A lot of people get into this refinance process and they think, oh gosh, it's going to happen in 15 days. But just like any other loan, the national average is about 50 days. Now our team has closed refinances in less than 30 days, but it is a very individual answer that depends on you. It depends on your house, the type of refinance that you're going with. Did you get an appraisal waiver? Are you doing a streamline where no income docs are needed? So if you're on a time restraint, ask your loan officer what is the most realistic time frame and what can you do to help speed it up. I know there are a few other questions that I am not answering in this video, such as how do I calculate the savings? Maybe you have a loan officer who's not walking through with you how much it's going to save you. And there are a bunch of fancy calculators that you can find online. I'm a little old school when I calculate the savings, and I do some simple math, and I do have some calculators that I use. And what I'd like to do is look at an example on my computer screen that I send to clients to help you understand how to do this. So click on the next video if you're interested in seeing a few examples on my computer screen, and I'll walk through what those actual costs truly are. Thanks for tuning in today. We can't wait to see if you have any questions or feedback that you have about refinancing. And if you liked or learned something from this video and would like to see more, make sure that you subscribe to the channel and hit the bell so you'll get notified each week when we release a new video. And remember, finding the right mortgage advisor who will fight for your dreams and educate you on how to build a financial foundation for your future, that's what's going to set you up for success. So click on the link below and schedule a call with one of our mortgage experts today.